For today's video lecture, we will be covering problem number 1 of set off and carry forward of losses subunit from direct tax 2. So problem number 1 deals with basic understanding of set off and carry forward of losses. So in this problem, Mr. B is a resident individual and his following information is given, and we need to calculate his total income for assessment year 25-26. And it is also said that Mr. B is paying tax under 115 BAC, which means that we are using new tax regime. Whenever we are going for new tax regime under set off and carry forward, we have to remember that house property loss cannot be set off, or you cannot carry forward the house property loss. Very important. So whenever whatever loss is there, and if you're claiming 115 BAC new regime, you cannot carry forward house property loss. Very important. Now we will discuss each head of income one by one, which Mr. B is earning. First one is income from salary is around 45,000, which Mr. B is computing. Income from house property, that is loss. There is a loss which is 24,000. So now we need to remember that whenever there is a loss under house property, and if the SSC is going for new regime, you cannot set off house property, or you cannot carry forward this in loss also. So this will not appear while solving the problem. That is 24,000 we will not take into consideration. Next one is income from non-speculative business. That is a normal loss is around 22,000 business. So Mr. B is doing a normal some kind of business and making a loss of 22,000. Mr. B is also making a speculative loss and making a loss of 4,000. Speculative loss means doing trading of futures option derivative loss and making a loss of around 4,000. Sorry. Then there is short-term capital loss of around 25,000, and there is a long-term capital gain of 19,000. So now we need to calculate Mr. B total income. So first we have to see intra-head, and then we will go for inter-head. Okay. So intra-head means within the head of income, and inter means between different head of income. Now if we see income from salary, there is only one head. Then house property, one head. But house property we will not doing a set off because of new regime. Business, there are two subheads under this business head. There is non-speculative and speculative business. But we have to remember a very important point. Whenever there is a loss of speculative business, you can set off that with profit of speculative business only. And whenever there is a loss of business income, you can set off with any other income except salary. So salary, this we cannot set off against salary. Very important point. Next, we have short-term capital loss and long-term capital gain. So we have to remember, very important is long-term capital gain can be set off against long-term capital gain only. Means whenever there is a long-term capital loss, it can be set off against long-term capital gains only. Very important point. But whenever there is short-term capital loss, it can be set off against short-term capital gain, and you can set off that against long-term capital gain also. So if we see here, we have short-term capital loss and we have long-term capital gain. So this 25,000 or this 19,000 can be set off against short-term capital loss also. So 25,000 and 19,000 we have. So we can set off, and we will be having around 6,000 as short term capital loss which will be carried forward for next 8 years. Okay, next, as per the set of rules, it will be carried forward. So let us start with the solving part. So this is your format: total income of Mr. B for assessment year 25-26. So first one is income from salary. So this is the income, and this we don't have any loss from salary. If logical, there will be never loss from salary. So most of the time, income from salary will be always taxable. Income from house property, since Mr. B is taking an default, that is tax regime, new tax regime, you cannot neither set off house property loss or you cannot carry forward. So that's why we are taking it as nil. Next is profit and gains from business or profession. We have business loss, that is non-speculative business loss of around 22,000. So this can be carried forward, and we have speculative loss which can be carried forward. So we have to remember that whenever there is a loss from speculative loss, you can in future can be set off against speculative profit only, and business loss can be set off against any other business gain, business gain only whenever we are going for carry forward. Okay, please, these points, 2 points are very, very important. Next one is capital gain. So long term capital gain we have around 19,000, and we have short term capital loss of 25,000. Out of 25,000 we can set off against the profit of 19,000, and we have capital gain as nil, 0, and remaining amount 6,000 we can carry forward for next uh, more than next couple of years, many years, and this loss can be set off against only capital gain. Capital gain, that is short term capital gain or long term capital gain in future. So now the taxable income is 45,000. So this is the way we have to compute set off and set off. We have to do the set off, and we have to explain how much amount has to be carried forward. And these are the notes which are given: note 1, note 2, and note 3. You can just have a look. Note 1 talks about business loss cannot be set off against salary income. Note 2 talks about loss from 4,000 speculative business cannot be set off against income from speculative business, and therefore it has to be carried forward. And short term capital loss can be set off against both short term capital gain and long term capital gain. This, all these 3 points I had explained clearly. So with this we had a discussion about problem and solution of how to do a basic adjustment of set off, and how the basic working of set off and carry forward under income tax works. Thank you, students.